Hi guys, Louie here, and welcome to the weekend. If my voice is a little hoarse, it's because I am recovering from COVID. Yeah, worst flu I ever had. Took me out for an entire week, even though I was vaccinated. Anyway, y'all be aware out there, the strain that's going around is just a whopper killer flu, not like the one before it. I made a little silver tree here, right, with some cute pieces that I like. We're out in the yard. Hopefully we'll get visited by some birds and just kind of get back to basics here. So what happened last week, right? We got the drop that I was predicting. I still had not bought any silver, hadn't bought any silver for at least a couple of months now, waiting for the spike down to 1850 was my floor prediction. And we not only hit it, we went through it down to about $18.15. Just a shockingly low number. Of course, gold is cracking as well. And you may ask yourself, well, why is gold going down? Gold is a monetary metal, whereas silver is a commodity, and silver and commodities have been selling off. Remember I predicted oil would sell off? Well, it sure did, and it's going to continue down in my opinion. I think all commodities are going to continue down. So I think we've seen the tops in commodities. Inflation is going to be stubborn here for a few more months, without a doubt. But I think we've taken the top off of the commodity spike. But why was gold going down? And of course, when gold goes down, silver goes down in sympathy. But silver being the commodity, right, and gold being the monetary metal, the currency, if you will. Well, it's that thing that I have been predicting all along. And it's the same reason I didn't buy when silver was at $18.15. I wanted to, I thought about it, I almost did, but the premiums just were not at the $1.50 level. I have set a mark in my mind that when I buy bullion, it's going to be 1850 spot or lower and a $1.50 premium. And it was not. The premiums were up around 229, 250 in some cases. And I decided not to pull the trigger. Of course, we had a nice recovery, a nice bounce in silver, back up to the high 18s. And surprisingly, yesterday, the premiums came off what I was looking for. I was looking for silver shot, and I was able to buy 100 ounces of silver shot from bullion exchanges at about $20.15 over per ounce. So basically 20 bucks an ounce. Finally, some of the retailers are really starting to move their product. I wanted shot for my next pouring exercise, and I was happy to get it at $20. But you know what? That same shot was over 21 the day that silver hit $18.15. Go figure. I still think that dealers are grappling with growing inventory and stockpiles of silver that people don't want. Why is that? Well, I can tell you after 10 years of doing this, as I've been telling you, when the spot price is dropping, people do not want to buy. So I think you have to put yourself in the mindset of an average Joe, not in the mindset of a stacker who's super excited to be getting bargains down here with an undervalued asset. But from the average Joe's perspective, they want to buy things that are going up, and they're actually selling silver. So I think silver is in distribution, SLV is in distribution, LCSs are buying back silver. One very large silver shop that you guys would know if I pointed it out to you said that he is paying spot for Silver Eagles Okay, so the premiums really coming off Silver Eagles as I predicted. You could buy them today probably for 29, but I would not buy one until they're at least 25. Premiums coming off Constitutional. All right, just as I predicted, again, we're in a down market. We're in a bear market right now for silver, and that's when premiums drop. On the spike days, I would admit that the premiums did not come all the way down to $1.50 as I wanted, which kept me from buying. But as we ratchet lower, and I do think we're going to ratchet lower here, as 1850 was my target price to begin buying again. And like I said, I bought that $20 shot. But I think we've got another move down coming. I think we've got another move down coming in gold as well. And the reason is that while there is a liquidity drain right now, people have lost a lot of money in the stock market and crypto. There is complacency, and the stock market has not sold off to the extent that it's going to sell off. I thought we might crack 30,000 on the Dow on Friday, but instead the Fed, the Fed governors started saying a whole bunch of happy horse shit about, everything's going to be okay, and we don't need to do rate increases as much as you might fear. But the reality is the Fed is going to do their rate increases. They're going, as long as CPI prints high, and I think CPI will be decreasing, but it will still print high. They're going to continue to crash the economy. I don't think they're going to pivot. I think we're going to get that market dive that's going to take the Dow closer to 20,000 than 30,000. And when that liquidity event happens and there is true panic in the street, I think we can go lower on silver and gold as well. Because there's only so much cash, and most people have been fully invested. So it's really hard to have cash if you've been buying every dip. It's really hard to buy silver or gold if you've been, averaging down. And that's why I've been waiting. I don't recommend that for everyone. I'm just telling you what I'm doing. Someone who already has a good size stack. I bought my 100 ounces, and I'm good for now. I'm looking for an exogenous event. I think it's going to come from the banking system, probably from Europe. I think potentially the dollar could the Dixie could go all the way to 115. The euro is falling apart, as you know. Good time to go to, France or Germany, I suppose, if you don't get caught up in food riots and whatever's going on around the world. But I think we're going to have, I don't think we're just naturally going to ratchet lower below Dow 30,000. I think we're going to have some kind of exogenous event that could stem from the banking system, and I want to talk about that for a minute, that could just, put a hatchet in the stock market. And when that happens, I think we're going to see metals sell off further. I don't think silver is going to go below. I think it's going to spend some time in the 17s, and I'm hoping it doesn't go lower than that, but you'll know it when it happens, and it will be happening along with a bigger market sell-off. In my humble opinion, I don't know everything, I hardly know anything, just my opinion, not financial advice, but that's why I am still stacking cash, and I did not go all in at $18 silver. And it shocks me to say that because, I was predicting 35 by the end of the year when silver was in the mid-20s and the chart was strong. I really thought we would take another leg up. But it turns out, $30, the last time we hit 30 was a sell. And the last time, pardon the noise, the last time we hit $25 was a sell. Okay, now I was selling collector coins last year, liquidating as fast as I could, but it never dawned on me to liquidate bullion. So that's why there's always a time to buy and a time to sell. If you had liquidated all your bullion or half of your bullion when silver was pushing 29.30, you'd be able to buy it back and have twice as much. And don't tell me premiums are high. Okay, stop saying that, everybody. Anybody who's saying that, apparently just wants to be complacent. And it's okay to be complacent, but don't lead your friends to believe that premiums aren't dropping and dropping rapidly, that dealer stock isn't increasing. There's all the silver you would ever want to buy. It's everywhere. I think it'd be a great time to go trolling LCSs for what's in their junk piles and what's in their vintage bar stacks. But I think we're going to see lower prices, and I think we're going to see lower premiums on everything. All right. Yeah, so that's why I just bought the shot. I can play around with that and pour 100 ounces of silver and, wait for the market to recover before I try to sell that. But look for something happening exogenous. And we get threats of that every day. I know a lot of channels talk about Armageddon and the financial system collapsing. And I don't doubt that bad things are coming. But I think to get the markets to sell off and to get precious metals to sell off further, we're going to have a blow of something, a blow of some kind. Something similar to the COVID lockdowns. But it won't be that, because they've already done that. All right, it'll be something else. I'm really worried about the banks. And I don't know if you're worried about this, but if you have money in the bank, and I don't mean a couple bucks, I mean serious money. If you have money in the bank, you have money in CDs, etc., I think it's a great time to get serious money out of the banks. I think what's happening will come from the banking system, and I think it will. There'll be some bankruptcies. There'll be some bank closures. It'll overwhelm FDIC, and I think we're going to see bail-ins. So if you had $100,000 in CDs at, Bank of America, for example, I think it's very possible that some banks could go illiquid, and you don't get your 100,000 back. You get the Barney Frank bail-in, which means you get $100,000 of bank stock, or depending on who they pick and how they unleash that punishment. So what I'm doing is keeping my money in my brokerage account. And while it's sitting there, I've got some short-term bonds that are paying 3-4%, just to park the money over at E-Trade, and I'm not overnight investing it in their banking product, just bonds. Just bonds right now. No, that's not the long-term solution, and that's not where I would leave a lot of money. But I think a lot of people have a lot of money in CDs at the bank, and I know they're paying more these days, but I'm worried about financial crisis coming to the banking systems and that crashing the Dow. If you're buying the dip right now, I'd be very cautious with that in the stock market. I know it looks like we keep getting these violent bounces, but you're buying into a recession. You're buying into a Fed tightening cycle, and you're buying into Jerome Powell, who wants to leave a legacy of being strong. The way he's strong is he crashes the market. Okay, he crashes your job, he crashes your income, he gets inflation under control so people can stop yelling at him about that. But I think that's where we're headed, and I think it will be much lower. You'll know when the VIX is back in the mid-30s that panic is coming back, and I'm still waiting for that 2,000 point down day on the Dow, which will probably be followed by a 5,000 point down day, right? That's the kind of event I'm looking for to go back all in with the cash that I'm raising, but both for silver and gold, and the stock market. At some point, I'm going to get back into the stock market, but not here, not now. So let me know what you're finding out there. I saw a couple of things I almost bought. Besides the shot, which was at bullion exchanges. I don't know if they still have that. Close to 20 bucks for 100 ounces of shot, 20 bucks an ounce. I saw Constitutional, and I was really tempted to pick up 40% Kennedys, which I typically would never want, but was it Hero Bullion? My three primaries are Hero, Bold, and Monument. Bullion exchanges as well. And because they're not part of the A-Mark Borg, okay, .jm Bullion, Provident, et cetera, Silver Gold Bull, avoid A-Mark companies if you can. I believe it is A-Mark that is hoarding Silver Eagles right now, trying to keep the premiums up so they don't lose, all that profit. They're gonna roll those out slowly to you until the aftermarket pushes the prices down. But yeah, I think it's A-Mark that is that's hoarding the 22 Silver Eagles, not letting them into the marketplace in bulk. But yeah, Monument, Bold, and Hero I like a lot. Bullion Exchanges is doing okay as well. And I saw the shot. I saw some 40% Kennedys, and I typically wouldn't want those, but Constitutional is Constitutional, right? And if they're charging $7 over spot for a 90% coin, and you can get the 40% Kennedys for 99 cents over spot, that is a $6-7 discount on the premiums. This is the other thing that shows you that the market is soft. People sell their war nickels, people sell their 40% silver. It kind of they sell their kilos, they sell anything made outside of the United States. But 40% Kennedys at 99 cents over spot at one of those three dealers was, boy, I almost picked that up. Matter of fact, they're selling for much more than that on eBay, so there may be a premium on that. But that's the kind of product you want to own into a rising market. But that shows you how out of favor some things are. And if I was going to buy, it would likely be the kilos. It would likely be something like the 40% Constitutional. And you see the premiums dropping on the Constitutional as well, but they have a lot farther to come down. There'll be plenty of it. There'll be plenty of it. Don't buy the shortage theories. I would not sleep well at night if I didn't have my silver and gold. But for those of you trading your silver for gold, I think that's the equivalent right now of trading Netflix for oil. Right? I think gold's got somewhere to drop because the dollar is strong and getting stronger. At some point that'll reverse, but what currency among the euro and the yen, et cetera, is going to strengthen above the level of the dollar? When's that going to happen? And of course, gold does trade inverse to the dollar. I'm sure in other countries it probably is holding, the value is holding pretty flat in your currency, but in dollars it is dropping because the dollar is strengthening. There could also be something up with government manipulation in regard to wanting to crush Russia. Right? I mean, that's out there. They want to crush Russia by bringing oil down. They want to crush Russia by forbidding the Russian gold for oil trade. Don't underestimate the power of our system to manipulate these prices. But nonetheless, premiums are lower. Spot price is exceedingly low. There's nothing wrong with buying now. If you want to do that, I'm just telling you, I think there's a leg down, another leg down coming. And it gets harder and harder to make videos where you can't predict that the price will rise imminently, right? But nobody can predict that. You can't predict that it will be tomorrow or next month or next, quarter. You just don't know. And the question is not, really, a helicopter? Early morning? Sorry about that, guys. It's probably a medical evac. Can't see them. You don't know, it's not so much how low will metals go, it's how long they will be low. All right. And this recession could prove to be kind of a stinker, could prove to be a 1 or 2 year event. Of course, it could get worse than that as well. So, like I said a couple videos ago, don't be a slave to your precious metals. Have your cash on hand as well. I don't know what it is you want to buy, but silver could be down at these levels for a year. So don't feel the urgency. I think if you're looking to make a big investment, I think you have to be willing to miss the bottom to get the best deal, right? And the opposite approach is to average in. I think that's fine, but it could be down here for a while, and I don't have any doubt that we'll hit my 35 target at some point. But what if we're down here for a year? What if the recession gets worse, right? And that's not going to be good for silver. And I think the U.S. is still the strongest currency in the bunch. So, short of a full-on system reset, be prepared for the long haul. I know I am, and I'm happy to still have this asset, but it's not my only asset. Okay, that's all I have to say today. Sorry for the long video. I hope you enjoyed the outdoor setting in spite of the noise. And you guys have a great week. Bye.